You put $358 million into airlines and got nearly wiped out. That was Buffett in 1989 breaking his own rule, the rule that would have saved him fits one page. Charlie Munger called it inversion, and it built his fortune. Instead of asking how to win, Munger asks how to lose. Tell me where I will die, so I never go there. The question that ruins beginners is the wrong question entirely. They chase getting rich. Munger asks what makes him broke. He flips the problem over and the traps light up red. A checklist that kills bad ideas beats any hunch. Munger built a $2 billion fortune mostly by dodging disasters. The disaster you dodge pays more than the winner you chase. You will pre-mortem any business the way Graham taught Buffett. First the money, because inversion is really about avoiding ruin. Most investors chase the next winner across Wall Street. Munger says it is easier to avoid losers who go broke. Brilliance is rare, but stupidity fills every page of the market. So he inverts and asks what guarantees a ruined portfolio. The answer is a short, ugly list Munger memorized. Too much debt, no moat, a commodity, insiders looting the till. Avoid those four, and you dodge most permanent ruin. A permanent loss leaves you penniless, and Graham feared it most. Prices recover, but a bankrupt company never comes back. The habit that made Munger rich looks almost lazy. He rejects far more ideas than he ever buys. 9 of 10 fail his backward test on the page. The 10th survives, and that gold coin is where money hides. You do not need genius, only the nerve to say no. Nothing shows this better than one seductive industry Buffett hated. Airlines look thrilling on every bright travel poster. Forward-thinking sees full planes and endless rising demand. Inversion asks a colder question through the cockpit window. Buffett bought US Air Preferred and watched it curl to red. His $358 million stake was nearly worthless within a few years. He later called airlines a death trap for hopeful investors. The airline that wiped out 60 years of profit looked healthy. Zoom out, and the industry is a graveyard of dark hangers. Since Kitty Hawk, airlines earned almost no lasting profit. Add up 100 years, and the gain rounds to zero. Buffett joked a capitalist should have shot Orville right down. By 2000, US carriers had lost billions in red ink. United and American both went bankrupt in open court. In 2005, Delta and Northwest went bankrupt the very same year. American Airlines followed in 2011, wiping out its shareholders. Across the 2000s, US airlines together lost about $60 billion. Since 1978, more than 100 US carriers have gone bankrupt. By 2010, total US airline debt had climbed past $100 billion. A lawsuit that lands in a downturn buries a carrier. Every decade, a new investor believes the chart is different. The loss that airlines racked over a century fills the page. Inversion would have flagged the trap before you lost a dime. So how do you run that test on your ledger? The tool is a pre-mortem set on a bright tray. Imagine it is 3 years later, the stock a disaster. The company is broke and your money is gone. Working backward, you trace the red line to the corpse. Your mind suddenly finds risks, the sales pitch buried in dark. The ritual that Munger runs imagines the funeral first. Buffett calls it working backward from the graveyard. A pre-mortem hunts for the corpse instead of trusting the pitch. You are not predicting doom, you are stress testing on the page. Write down every way this business could go to zero. Then check the ledger for which deaths are already likely. Step 1, write its obituary on a single blank page. Step 2, list on the ledger every force pushing towards zero. Step 3, mark each red risk by how likely it is. Step 4, ask if any single risk could wipe you out. The risk that can bankrupt you outranks every smaller worry. The test that flags a disaster takes about 10 minutes. 10 minutes of inversion can save you 10 years of regret. To make it repeatable, Munger turns it into 6 questions. Answer these 6 and the corpse reveals itself in the dark. Question 1 asks about debt, the fastest way to die. Could one bad year make the debt impossible to pay? The debt that looks fine destroys you by dark December. Airlines borrow in red ink, then die under the debt. 1 weak quarter, and the interest alone can bury the ledger. Question 2 asks about the moat, the wall around the profit. What stops a rival from copying this and crushing the price? A moat that a rival copies overnight was no moat. Every airline sells the same grey seat from the same city. With no moat, they fight on price in red ink. Question 3 asks about pricing power, the quiet superpower. Can the company raise prices or must it match the chart? The margin that competition eats is a margin you never keep. A ticket war drags carriers to the same red line. Great businesses set prices. Weak ones bleed and collapse. Question 4 asks about capital, the sneaky one Buffett warns of. The cash that new planes swallow never reaches your page. Airlines buy new jets forever just to keep the doors open. Growth eats the profit. Owners are left broke in the dark. Question 5 asks whether customers leave for a red cent. The customer that leaves for a penny gives you no power. Flyers pick the cheapest fare, forgetting the brand by the window. Question 6 asks about the people steering the ship. Are insiders buying beside you or slipping out the back door? The insiders that sell while you buy are telling you plenty. Dilution and looting drain the ledger from the inside out. 6 questions, and each one hunts a different cause of death. Now run all 6 against airlines. Watch the red lamps. Debt crushing until one bad recession kills the carrier. Moat none, since any rival flies the identical chart. Pricing power 0, because the cheapest red fare always wins. Capital ravenous, swallowing every dollar into the dark. Customers disloyal, chasing a fare $10 lower down the page. Management trapped, running hard just to dodge collapse. The verdict that inversion hands you is stamped in red. 6 kill questions, 6 red flags, and 1 obvious answer. You do not need a forecast to avoid this dark wreck. You only see the corpse the bright brochure hides. The stock that looks cheapest often ruins you the most. A value trap, even cheap, still bleeds the page. That is the whole edge, and Munger gives it free. 2 of its rivals collapsing can drag the last one down. Inversion turns a roaring poster into a quiet grey no. A boring no keeps you rich while others go broke. Buffett paid $358 million to learn this the hard way. You get the same scar for the price of a page. Now turn all 6 questions on Sears, once a retail giant. Question 1, debt. Sears drowned under billions it could not repay. The debt that sank Sears buried a 120-year-old giant. Question 2, moat. By 2010, Amazon had stolen its every aisle. Question 3, pricing power. Sears discounted until the margins died. Question 4, capital. Sears burned cash faster than stores earned. One of the 6 questions alone would have saved Sears investors. The mistake that ruins good investors is trusting a cheap price. A stock that looks like deep value melted from $50 to 0. By 2018, Sears went bankrupt and its shareholders were wiped out. Inversion flagged every death years before the 2018 collapse. The same 6 questions expose the next Sears hiding today. So fix the method firmly right here on a clean page. 1, imagine the investment already dead 3 years out. 2, work backward and name every cause of that death. 3, run the 6 kill questions against the ledger. 4, if 2 or more scream danger, shut the door. 5, keep cash for the business that survives all 6. The discipline that keeps you out of ruin beats raw genius. Munger got rich, saying a calm backward no to disasters. Graham gave him the method. Munger made it a habit. The edge was never a higher IQ or a faster wire. The edge is asking where you die, then avoiding it. Airlines destroyed 100 years of capital in plain daylight. Inversion would have kept your money dry above the flood. Run the pre-mortem before every buy. Let the dead teach. Do that, and Munger's backward question becomes your quiet edge. Next, the CapEx number companies never split out, and how to split it.